Test, test, test. 1, 2, 3. We should be live. Yes. A wonderful Tuesday one. I hope everyone is kind of holding up with all this absolute madness in the market. Welcome to today's episode live on Twitter, or if you're watching this afterwards on YouTube, or you're watching this, welcome, and I hope you're doing well. With everything that's going on, I think three topics that we want to discuss. We're going to start off with a bit of a summary of FTX, status quo on FTX. If you remember last week, this was kind of the beginning of this entire thing. We didn't know yet if FTX was going to be rescued or not. At the end, we know this now. It did not. Filed for Chapter 11 bankruptcy. And so I'll have Fabio kind of guide us a bit through on what's happening, what's the stories out there. I don't know, maybe there's any kind of tinfoil hat craziness, conspiracy theories that Fabio has seen in the good old World Wide Web. We're doing this because I actually need 5 extra more minutes to get ready with everything. It's been absolute madness. Today, I actually set an alarm. I remember Fabio writing to me on Slack. I set myself an alarm at close to 3 a.m. just because I wanted to wake up in the middle of the night to just check. Is everything working? Anything we need to kind of pay attention to? And Fabio's like, seriously, like you set an alarm in the middle of the night. I said, yeah, I had to. It's u-zyn and myself alternating kind of. And so it's been really, really, really intense. Just so many inquiries, so many requests, media, customers, obviously team members. It's just very, very intense. And I don't only think it's for us as a company, I think for any company out there. And then we're in this really good position. And then that's going to be the second part today. I want to talk a bit about Cake and where we're standing, what is happening, and so on. We're in this really good position that we are zero impacted by that at all. So we can sleep well at night. But that still means I want to be sure that everything is under control and everything is working well. And then depending on the time a bit at the end, we do have the general economy going on. We had US elections. Suddenly, no one really cares about this anymore, it seems. This is totally irrelevant. CPI numbers were outstanding, but no one really cares about this. But we should definitely cover that because there may be the possibility of a major kind of bull run. And so, it would definitely be interesting to discuss that and then share maybe a few ideas on how to proceed. So I'll let Fabio take it away from here a bit. And then I will jump. I'll obviously listen in, but I just need to prepare a couple of final things because it was really on the fly here that I came into that call. And I'll let Fabio lead it a couple of minutes. I'll be back right afterwards.
Okay. Let me just, yes, my audio is working. I'm on my phone right now because I cannot seem to connect my AirPods, but I should be fine. FTX. It is crazy because when you go back 14 days, so the 1st of November was the day where the CoinDesk report came out, where a pretty elaborate article that looked into Alameda and FTX and their balance sheet and their token allocations. And back then, it wasn't considered a big issue. There were a few Twitter accounts that were picking this up and tweeting about this. But from 2nd of November onwards, things started to accelerate pretty drastically. So right now we have 15th of November, and you all kind of know the story. So just to look at the timeline, 2nd of November was the CoinDesk headline, and then I think about 6th of November, CZ started tweeting that he wants to sell FTT token. So there was 4 or 5 days in between. And from then on, things started to accelerate drastically. So with the tweet of CZ, we also saw a price drop in FTT. And this made things, of course, even worse. Then you had this public back and forth between SBF and between CZ, which probably most of you saw. And then it kind of was a senator has no close moment for FTX. And things are not as great as they are right now. So they filed for Chapter 11, so they are insolvent, they are bankrupt, and initially it was thought that this is just FTX International, but right now we know that FTX US is also affected by this, and the contagion might be bigger than most of us initially expected. So there were already other exchanges and companies coming out that said, hey, we have exposure to one of Alameda's companies, because they have, I think, more than 100 companies. So SBF, Alameda, and FTX, they're tied into approximately 100 companies. And you saw companies like Huobi came out that they said they have 13 million of customer funds on FTX that they're not able to access. There was a bigger Hong Kong exchange that paused withdrawals. There are reported issues with Crypto.com where they said where withdrawals are taking longer than expected. And at this point, it's hard to say how real this is. My initial expectation is always, when I read these things, that this might be considered FUD, because you never know. And on Twitter, things can get heated pretty quickly. There is one or two people tweeting about something, and then everything just explodes. But with that said, if you are a company and you are experiencing like sort of a bank run like Crypto.com is experiencing right now, if things are bad or not perfect, of course this is not helpful, because, and you saw that Crypto.com, they have their own token CRO, which is not performing that well currently. So I guess something to follow is definitely the happenings and what with Crypto.com, what's happening around Crypto.com. And then there is a Twitter account that is hosting crazy Twitter spaces, like 3 days, 4 days in a row, where King.com, Elon Musk, Charles Hoskinson, US regulators, Richard Hart, like everybody that is just a little bit famous on Twitter, they are participating in these Twitter spaces, and they're just talking about FTX and withdrawing your funds from exchanges. So if you look at Glassnode, for example, and if you look on how much Bitcoin is currently on exchanges, there's definitely a bank run happening. Definitely a lot of users withdrawing their funds to hardware wallets, which is a good development. This is why we're in crypto, to take ownership of your own assets, and a lot of uncertainty, fear and uncertainties in the market right now. Just to briefly touch on a few conspiracy theories that are out there, because there is a lot of finger pointing and blame game. So for example, BlockFi is pointing at FTX, and they're practically blaming FTX for their downfall. The same goes for 3 Euro Capital and Celsius. They're jumping in and they say this was a targeted attack, and that FTX or SBF is behind everything. Some people call him a federal agent. This is pure speculation and somewhat of a conspiracy theory. I'm just throwing this in. But the impact that he had on the general market was definitely questionable. The agenda that he drove was questionable. The regulation that he tried to pass was questionable. And right now there is, so for example, Mr. Wonderful from Shark Tank, his real name is Kevin O'Leary. Kevin O'Leary, he was an investor in FTX, and there was like a video from a few months ago where he said that he's fully trusting FTX, and this is like the best exchange ever, and he's an investor there and everything. And 2 days ago, he said he's personally going to fly to Washington and push for regulation. The caveat in this story is that FTX actually was regulated. And I'm not 100% sure if regulation would have changed anything, or harder regulation. I don't know if you have another take on that, Julian. I think you're back now, somewhat.
No, finished. Just had to finish everything here, sign off on everything. Keep going.
The question I ask myself honestly is, a lot of people, they say, oh yeah, the crypto markets are unregulated and regulation would have changed this. And I'm not 100% sure if a regulation would have changed anything, because both in the Bahamas and in Washington, SBF was a regular there, and FTX was regulated. They were in contact with regulators more than anybody else. In my mind, I think Saylor gave a pretty good summary, because so the issue, in my opinion, is if they practically created their own token, and it's super hard to get a loan with your own token. But what he did is practically he FTX reached out to Alameda, and Alameda practically was the bank to FTX, and they said, okay, we are going to post FTT as a collateral to Alameda, and Alameda is giving them a loan on their FTT token, which is like he practically gave a loan to himself. And I'm not 100% sure if how this was possible. Like probably it was possible because he was in control of both companies. But this is practically the thing that led to all the things that we are experiencing right now. That he created the token, he loaned the token against his own company, and bought other assets with that. And he, with the downfall of the token, or with the decrease of the token price, his collateral got lower and lower. And then, of course, when he got called out for the whole situation, things just started to spiral. Yeah.
Yeah, I mean, my take on this is, I mean, it's a very famous Warren Buffett quote, which is like, you look for three things in any person. You look for someone who's very smart and intelligent about how they approach things. You look about someone who has a lot of energy and is really driven, and then you look for someone with high integrity. And if you have someone with low integrity, you hope that they don't have the other two, because there's nothing worse than having someone that's extremely smart, extremely energetic, and has low integrity. Because that person is really going to screw you over. And I mean, you see this all the time when you have these really crazy kind of downfalls of very elaborate kind of schemes. Then these are not like stupid people. These are not people who are lazy. These are people who are, and I mean, this is very interesting from a psycho like analysis. If you kind of go about this, um, these people tend to be obviously very smart. They work a lot, but it seems that they are driven by some kind of thing, and many times actually like narcissism is involved, but they have this very strong energy, and they don't, and we don't know the details, right? We don't know the details on where did SBF kind of go off the rails. We really don't. It may be that he was all the way until 3 Hours Capital. He was legit, and then after the loan of Alameda, there kind of went rogue. He started doing some crazy stuff. We don't know, right? It may be that it was already way earlier. I mean, that's something that, yeah, we may never find out. Hopefully, we do, because it would be interesting to understand. Um, but it seems that these are people that believe that 100% of the ends justify the means. And you have the exact opposite, where people believe that the means always trump the ends. And so that basically means it matters so much how you approach something. And then you have people like him who probably think it doesn't matter how many pawns you have to sacrifice as long as we get to the end stage. And and at the end, right, the reality of that is that you probably need to be somewhere in the middle, right? There's no right or wrong here. I think the really good decision makers, the people who really get a lot of stuff done in life, these are people who do understand that to a certain extent the ends justify the means, but not to every extreme. And that is the key part at that question, and that's where it comes down to integrity. It comes down on, if you are religious, can you like stand in front of your creator, whoever you believe in, and can you say with the best of your conscience, yes, you know what I did there, if you would do this to me, I would be absolutely okay if I were on the other side, right? Or if you're not religious, you don't believe in someone, can you look into, could you, like, who is the person you love the most, and you look that person into the eye, and you would be like, would you be okay in having that person on the other side? Would you be okay in looking yourself into the mirror and admitting that what you did is fully aligned with your values, right? And that is absolutely essential. Now, the people always flip this, and they like always go this route in saying, where the means are so important, and and there cannot be any sacrifices made. But I mean, any good game is won, and a chess game. In a chess game, it's always won. You will have to sacrifice certain pieces. That's absolutely normal. But if you sacrifice everything, then it's the king left and no one else is left, right? And so you're not going to win that game. You're going to lose that game. And so it's so tricky to kind of understand that. And from a regulatory standpoint, I'm not sure if any regulator would have caught that. I'm not sure if anyone on the audit side would have caught that, because to me, the fundamental issue there seems a bit different. The fundamental issue, and that's where a lot of the conspiracy theories come from, is, so let me tell you a totally different story. And I'm gonna have ADHD here, and I'm gonna jump on something, and you're gonna see how the story actually ties in. I remember it's probably about, I would say 6 months ago. I don't know, 6 months ago, and I don't think I've ever shared this story publicly, but the story is completely true, and u-zyn can verify that. u-zyn and I were sitting, and we had, I can't remember, it was either lunch or breakfast, doesn't matter. And we were sitting and we were reflecting on the last 3 years, the business we started, if that business, if we made a good decision in how we started business. And then I said, you know what, u-zyn, I actually think we did a lot of things right. Did we everything perfect? No, but I think we did a lot of things right. I told him, how many companies do you know in the blockchain space that got started in 2019 or later that are more successful than we are? More successful in the sense of they're cash flow positive, they have 100, I think at that point we had like 120 or 130 employees, they have a good kind of roadmap, they have a lot of customers, they have some traction. How many businesses do you know? And so we were really reflecting, right? And I said, well, you know, there's probably, and at that point, OpenSea did still really well. I mean, now it's completely on a different level. So I said, you know, probably there's like a handful of companies at our level, but only one company sticks out that did significantly better than us, right? Don't forget, that's like 6 months ago. So I said, and that's FTX. And then I reflected with him and I said, you know what? I remember us discussing and debating the various businesses when we started in 2019. And I was convinced, and he was also convinced, that there was no space available for another trading platform or for another exchange. And I was really, really, really sure about this. And reflecting on FTX's kind of rise to the top, I still struggle understanding how FTX actually went up there. What made them so successful? What was the angle that they had? I still struggle a lot with that. And I still struggle with what's the business lesson here, right? So if you would go into a business school and be like, okay, let me teach you in how FTX went from nowhere in 2019 to a top 5 platform 3 years later. What's the business lesson here? And so to me, that's really, really tricky, right? And I don't know, Fabio, if you have a good answer to that. But my answer, I don't know, I'll let you answer first, because we have reflected on that now, actually, just yesterday, actually, over breakfast, when we can reflect on it. That's why I wanted to share the story. But I don't know, Fabio, if you have a good answer on that.
I might. I'm not sure, and this is very personal, but my personal opinion. So I feel with some companies in the crypto space, and I would count FTX as a very good example here, is there is this, with some people in the crypto space, it is a little bit of an ego thing. And I guess at one point he started to believe his own BS. And he didn't really, like at one point, and this is what I value here at the company, that you need to have this touch to reality. You need to know where you stand. You need to know how well you're doing. You cannot scale too fast. You need to take care of your balance sheet. You need to be conservative at some points. You need to take profits. This goes for personal investors and companies. And Alameda and FTX, they were just growing, spending. He sold himself as a pretty humble guy. Like, I'm a vegan, I drive a Corolla, I give so much money to charity. But from a company perspective, they were not really humble. He was very aggressive on Twitter. He was very aggressive with his purchases and with scaling and with growing. And at some point, you need to be reflecting. You need to be humble. You need to pause and to look at what you've built and to appreciate it. And in my opinion, this was missing a little bit. It was
Okay, I agree with you on all these points, but my question is, let's say you stand in front of a business school and you have to give like this class on what's making Apple successful, and you're probably going to talk about the beautiful design, and then you talk about what makes Tesla successful, and you probably talk about Elon and the work ethics and so on. What made FTX successful over the last 3 years that allowed FTX to actually go into a space that was dominated by Binance, dominated by Coinbase on both extremes of the spectrum? How did FTX gain market share there so significantly? What is the
I
lesson?
just Glenn, our COO, might have a good take on that, because I know for the fact that he followed the whole happenings with FTX and with SBF very, very closely, and he has usually some great insights. I just invited him up on stage. Hi, Glenn.
Wait, but I also need him. Glenn, can you check your Slack? Can you check your Slack? Because I also need
Glenn,
you
we
actually in the YouTube. Otherwise, it's going to be totally empty during that time. So if you are in front of a computer, it just needs some camera. You just log in there, and then maybe you speak. Then you can just log in here.
just give us a short, brief period of time while we, in the background, invite Glenn to join us. So my personal take is, I don't know, I love, so I can see behind Julian, if you're watching the video, there is a picture of Elon Musk and there is a picture of Steve Jobs. And I read the book of both people, that they have a pretty amazing autobiography. And Steve Jobs' main business lesson or main thing when he came back to Apple is he focused on the things that were really essential to the company. Not 100 products, not 100 different investments. No, 4 core products, 4 things that they actually were great at, and they doubled down on them, and they maximized those. And I'm not sure if I don't think FTX or SBF or Alameda, they did that. They were very diverse, very broad. They didn't focus on the things that worked the best for them. I guess this may be a little bit my take on it.
Yeah, we have Glenn in now. Yeah, I hope it's working. Yes, loud and clear.
Perfect. I just want to jump in because some of the things that you said kind of triggered me because I feel part of the whole FTX experience that they have built lacked a little bit of maturity and lacked a little bit of the experience. Like, let's not forget, SBF is 30. Caroline Ellison is 28 running Alameda. All of a sudden you're sitting on top of these billions and you've kind of figured out the game, right? Like this whole industry, you figured out this flywheel. Hey, FTX issues tokens, Alameda buys the tokens or gives money for the tokens, goes and leverages up, and we continue this flywheel, and the whole value just keeps going up. When everything is going up, like, it feels amazing, right? You're on top of the world. And now all of these stories are emerging of Sam Bankman-Fried with his, 8 friends in his penthouse in the Bahamas. People calling it the cabal now, like, and now it's sex orgies and all of that is becoming a bit crazy, right? But my take is that I think at some point they lost control of what they were doing. Sure, integrity aside, because it was set up from the beginning to, I think, be something that is not a sustainable business model. Like, it was always a pump model, but they lost control of what they were doing, and it became about playing the game and how far they could push the game. Like, why would you go lobby in the US for regulation? Why would you go and talk, smack about CZ, who's been an early backer of FTX? And sure, that it's all the game, right? Like, it's a Game of Thrones, and I think they were trying to see how far they could push the envelope, and they just overplayed their hand. It's like poker. You can bluff up to a certain point, but then you get called, so you have to show your cards, and then here you are, like pocket threes, and then you're up against
Glenn,
really good hand.
My question to Fabio was, what if you would have to teach this in a business school? What is the positive lesson that you can learn from FTX? What was the reason on why they managed to grow so quickly and so aggressively, so successfully in 3 years?
Well, if you leave the non-ethical stuff out, there's not much, right? The whole idea of creating a token, using that token as a share of value, and then getting other people to give you funds for that token, that in itself is a good concept, but the way that they've set it up was not good. I think the 3 things that are really important here is, one is you referenced Apple. Let's think about when Apple became a real business is when Steve Jobs left and when Tim Cook took over and put like this really solid operating model in place, really driving it as a business. It's kind of what we're doing with Cake at this point. Like it was very good when everything was going up. And then you decided, Julian, that, okay, we want to turn this into a real business and keep hiring people to put structure in place and to really develop our business model, grow the different revenue streams and build something out of this. And that, I think, is the most difficult thing to do. There's so many projects out there that stumble on something, right? Like Smart Team, okay, they build something and then all of a sudden things pop. Okay, that's great. But then they have a choice. Do you rug pull? Do you just like take the money and leave it? Or do you actually try to build the business? And trying to build a business is the most difficult thing to do. So I think from a business school perspective, like, first of all, they got the flywheel going. That's great. But then they had a choice. And then I think the lesson here is that how did they not diversify their business model enough? How did they not try to drive really good revenue streams for FTX? All they were doing is spending money and just throwing it in different projects and like, just backing things. But this is not sustainable because the flow is singular. It's all outflow. So why not create more things that come back that can kind of serve as revenue streams? So I think that's the big question.
Where I see the strengths coming in, right, and I think that's the business school lesson. And you obviously, any tool can be used for good and can be used for bad. And I think the business school lesson there is, and if you kind of look at Madoff, you look at Elizabeth Holmes with Theranos, you look at SBF, and I think you could really kind of, you can kind of compare them. What they really had in common was their incredible political network and their extreme connections all the way through. And so the reason why did I have that ADHD diversion, Fabio, where I mentioned I'm going to tie the connection at some point, and now I forget what the connection was that I wanted to tie. Do you remember that?
You're meeting with u-zyn.
Yeah, sure. So of course. So, okay. So but then there was a deeper reason to that. So when I sat with u-zyn, I said, I still think our decision on not doing an exchange in 2019 was the right decision. And I still think the only reason why FTX managed to actually play that game for so long, convince investors. And look, you can read the Sequoia papers. I mean, I was just interviewed today about Temasek here, like Sovereign Wealth Fund here in Singapore, burning 200 something million dollars on that, right? And how is this possible, right? And I really believe the reason this was possible was because everyone was just vouching for everyone else. And everyone was just saying, I'll do it because everyone else was doing it. So it was this perfect FOMO game at the highest level. And every once in a while, you have this one outlier that just manages to play everyone like a fiddle. And in this case, it was FTX and it was SBF. And I know I wanted to make a point for something. Maybe someone can tweet at me what the actual point was that I wanted to make. But it was not that it was using it myself. It was that story explanation on me believing that this was the fundamental reason on what actually set FTX apart. And obviously, if you are someone who's just really well connected, then you can use this for good. And I think he just forgot about the basic principles because he had all those and he just felt bulletproof, where he thought regulation. I mean, I don't think that, sure, he was bluffing, Glenn. I agree with you there. But I just felt that he played that game since the very beginning. And so for him, it kept working. And he saw zero reason why that game should stop right now. And obviously, we still don't know what exactly happened. If it was just Murphy's Law and like anything that can happen will at some point happen. And especially if it's bad, it will go bad. Or if it was really a coordinated attack, or maybe it was like this Machiavellian idea of now I remember. It was this psychoanalysis that I wanted to do, Fabio. Or it was this Machiavellian plan from CC, who actually said, you know what, Jack, I'll kill you there, right? So to me, what really comes down on, and that's probably that question now on the regulator. Now the string ties again. I remember everything what I wanted to say. A regulator would have had no chance, because that was the question you asked me, Fabio, if I think regulation could have stopped this. And so understanding all of this, I think in this very scenario, not a single bit of regulation could have helped, because SBF had all the connections Madoff was highly regulated, and he was able to bypass that thing. Theranos was regulated, but she was constantly able to evade everything and play the rules. It is always it just needs those very few things that people can gain, and then it just becomes very different. I mean, when we talk about CeDeFi, when we talk about combining the best out of the transparent world and the centralized world, that's the only thing that can work. It is this concept of having proof of reserves, having proof of funds, being able to show your liabilities, having this full transparency. And I really hope, and I mean, we have built Cake around these values since the very, very beginning. But I truly, truly, truly hope that going forward, customers will not use platforms that don't have these fundamental characteristics about transparency and about knowing that what the platform says that they are doing with your funds is what they're actually doing. If your platform goes and says, hey, listen, I mean, people always think Alameda Research is the one that was dodgy because people always, that's the issue. The issue, in my opinion, is Alameda Research is the reason why FTX went bankrupt, but it was not Alameda who did the dodgy shit. Yes, they did dodgy shit, but it was not illegal. The illegal stuff was lending out customer assets to Alameda Research. That was the dodgy shit, right? And so if that is clearly defined, that's like, hey, you're putting money on the platform, just like banks do. So you give us money, and then a certain amount of that money I can actually lend out. That means I'm actually never fully backed. So please don't bank run me. That's part of the game, right? So you, as a customer, whether you understand it or not, you're going to be part of that game. But if someone says, you deposit something, we're backing everything one for one, well, then you better do that. And that's where it's going to be quite interesting how this is going to happen from a penalty, also from a, I don't know, potential prison time and stuff.
It's quite. Can you? Okay, it's quite interesting to see all the conspiracy theories that are now popping up, right? Because SBF's father, then Stanford law professor, connected to Gary Gensler, SEC chair, used to be at Stanford together. His father also, supposedly, this is all rumor mill, but supposedly also an expert on offshore tax havens and how to set up structures. So there's an element when you start an enterprise, there's an element of the political connections that you need. His mother, fundraiser for the Democratic Party in the US, Sam Bankman-Fried, obviously smart, donates a bunch of cash to the Democratic Party, opens doors for him, gives him meetings with people. So you have to play the game at a very high level. You have to play the political game. Then you also have to play the regulatory game. And I think that both sides he was very active in, which is smart if you start something. And that's, I think, when things start opening up, because his father also introduced him to a billionaire hedge fund when he was fundraising quite in the beginning, to discuss philanthropic efforts. And then exactly what you said, Julian, the hedge fund was like, we got to get in. Like, there's a bunch of big names on this docket. Like, is something happening? Let's just ape in, because that's exactly what happens. And they throw in a bunch of money, and then somebody else sees that, throws in a bunch of money. The next fundraising round, more people like Temasek throw in money. It's just like names upon names upon names. And then, at some point, it's more about you're going after the reputation of these VCs and these funds, right, rather than the actual core of the business. And so when everything is blowing up, like last year, there's no real due diligence, I think, that happens behind the scenes. Sure, can we take a look at the books? Yeah, sure. Like, here's some high-level numbers. Oh, looks great. All these guys are on board. Okay, here's my $100 million. That's how it happens. So, yeah, it's a bit intense.
Yeah, and I mean, that's where a lot of the conspiracies now come in, right? I mean, I agree. I pulled up a couple of slides here. Let me just maybe walk you through those. And I'm pulling them up on YouTube and then on Twitter. I mean, we've shared them all the time. I just really want to highlight on, like, regulation is important, especially if it's smart regulation. Don't get me wrong. But at the end, it would really be required that we as customers, and now I'm really not having my CEO hat on. I mean, I also use other platforms, right? And I know, like, Glenn, you do too, Fabio, you do too. And I think, and I would even recommend anyone, right, to kind of diversify, use good platforms. But it doesn't help you if you diversify and you always have the same kind of rules. But one of the key rules has to be this transparency. We have had this since 2019 as a as a founding product principle, right? Trust because you can verify. And so this time again, we have the transparency page. We published a blog post about proof of reserve. So you can actually track and trace assets and liabilities because everything is happening on the blockchain. And this is where this concept of CeFi comes in, right? So I just really want to explain the strength of that. And there's going to be this idea of CDEX. So that's going to be the next thing. And I think that's going to be a humongous thing. And all the centralized platforms will have to go into this concept of what's called a CDEX. So very, very early stage. Most people have never heard of this. I quickly want to explain that because it is such a powerful idea. So DeFi, very straightforward. It means it's a protocol. It happens on a blockchain. It's completely public, completely transparent. The issue is you really need to understand how to store your private key. That's not possible for most people. Probably only 10, 15, 20% actually are able to store their private key. And the majority of users, they cannot, even with a ledger or something, because for them it becomes this question, where do I store those 24 words again? So it's just, it's quite tricky, right? Then how does inheritance work? What happens if I lose anything there? What happens if I'm incapacitated? And so on, right? So that's just always the big challenge. It would be fantastic if at some point everything could be true DeFi. The user experience is seamless, and we could we can trust the entire system because it's so transparent. The counter side to that is CeFi, and sure, we have seen massive DeFi hacks. Don't get me wrong here, but these have been mostly hacks. These have been issues. Terra Luna, typical DeFi problem. I want to be very clear on this. I also want to be clear. Do Kwon, we don't know if he could get jail time or could get prosecuted because of his involvement in Luna or because of things that happened actually behind the scenes. So stuff with the foundation, stuff with fundraising. So I doubt that his charge is going to be around the collapse of Luna itself, because that was completely transparent. Now, obviously, I'm not the lawyer. I'm not a judge there. This is just my assessment from what I've heard. What I really think is the issue here with CeFi is obviously this black box, right? We have seen this with Celsius, seen this with 3 Arrows, and we have seen this now with FTX as well. And so, in my opinion, the future of all of that, until we figure out better ways for DeFi, is going to be this concept of CDeFi. It's something that we have lived and breathed at Cake DeFi, which means we mix DeFi and CeFi. We try to pick the best parts out of each one. There are some that we have to take. Some appreciate that. Some don't like it. For example, user experience is fantastic, very user-friendly. The best thing is everything is public, everything is transparent. You can track and trace everything. So these are all upsides. It makes a lot of sense that everything is trackable, traceable, and so on. Obviously, the two questions that you have there is, are you okay that Cake is custodial? So that means we control your private key. Yes, you can track and trace everything, but we still control your private key. And there's always some people who have an issue with this. My suggestion there is diversify. Store some of your coins by controlling your own private key. Some where you trust a platform that's completely transparent, and mix and diversify. And then the other thing, obviously, is the regulation and the KYC part. Some people don't have an issue with that. Other people say, no, that's exactly my problem. That's what I don't want. Again, same thing here. Whether regulation is going to become too strong or not, just mix and diversify. And then you're going to get the best out of both worlds. And if we're taking this a step further, now, I'm not saying this is the route that Cake DeFi is going to go. I'm going to leave this. I don't want to comment on this right now. However, this entire thing about a centralized platform like Cake getting access to DeFi in a complete transparent manner would exactly be possible for exchanges as well. And then you would call this a CDEX. So basically, the entire order book, the order book would be transparent and public. Everything what happens with the exchange, the actual swap, would actually happen via DEX. You would have basically routing over various DEXs. So these platforms have all this set in, completely transparent. There's no possibility for cheating customers. There's no possibility for front running. It's possible, but everyone would see it. And there's proof of funds, everything that is there. Again, not commenting on at this stage whether we go this route or not go this route, but I just want to explain that I believe most platforms will get pressured to go this route going forward because customers are not going to accept anything else. Yes, we can have the proof of liabilities, we can have the Merkle proofs, yes, but it's never going to be exactly the same because there will always be some dodgy shit happening. For example, like Alameda trading against FTX customers, knowing all the order books, knowing all the insights. To me, it's absolutely crazy. Yes, I mean, it happens on the general markets as well. Don't get me wrong. It happens on the regular markets as well. I mean, like pay for order flow. I mean, that's exactly what happens at Robinhood, right? It's exactly the same thing. Just understand that I believe that that's going to be the road forward on this. Yeah, I don't know, Fabio, Glenn, any comments on that? Any thoughts on that? I afterwards, I want to quickly go through a couple of the promotions we have going on and talk about lending, but I want to kind of finish that FTX topic.
So on the topic of custodial parties and custodial exchanges, it's not black and white. There is custodial and custodial. And the thing that Julian touched on, so you have the traditional finance industry, like your bank, like your investment account, like a traditional exchange. But there are differences because a lot of traditional finance is a complete black box, and they do something is called fractional reserve banking. So they only, like for example, one of a big bank here in the Netherlands is called ING. They're pretty a worldwide institution. They have only 10% of the money they actually have. Like 90% is practically unbacked, and you cannot trace anything. So what are we doing here? What is this whole industry about? What is this whole revolution about? The crypto space. It is taking control of your financial destiny is one thing. That's also what you can see on the screen right now. This is our mission: taking control of your financial destiny, and this can be done. Julian formulated this very good. So one thing is you can take control of your own private key. But my recommendation, if I do this, if I recommend something to my mother or to my brother, is I would never recommend storing all of your wealth in your house on a ledger. Diversify, use different platforms. But, and here comes the but, the thing that we want to change in the crypto industry, the thing that we want to change at Cake is we want to do a better job than the banks. We want to do a better job than most of the exchanges. We want to offer you actually don't trust, verify. We want to be able to show you what happens to your asset. We want to be able to show you can go and track our lending reserves. We say on the website, we say with each and every batch how much Bitcoin is in there, what is the yield, and you can track where these assets are and how many assets we actually have. Like just a day ago, I think yesterday or this morning, Julian actually sent a hash to prove that this address is actually ours, because an exchange, we can say, okay, this address belongs to us, but how can you know that it's actually us that is controlling this? So the element that is different in the crypto space is we are actually able to prove that this is our address, to prove that we have the funds. And this is what we want to change in the industry. So that it's all about transparency. It's all about this information being public. And actually, if you want to, you can go onto the homepage and you can verify that this is actually the case. And so we want to build a better system than it's there. And this is the whole point. Yeah, Glenn, maybe you have something to add here.
I have a personal story to add here. 2019, I invested a nice chunk of change in a budding DEX startup in Europe, Nash Exchange. So they had exactly this idea. They said, we want to be, we're a DEX, but we want to be regulated. So they were applying for a European license, I think in Cyprus at the time. And it was exactly this concept, like how do we bridge kind of DeFi and CeFi, and how do we build like a proper platform for that? I think their main problem, and I think this is one of the benefits of having a CDEX that you mentioned, Julian, was liquidity. How do you get enough liquidity on these DEXs? How do you grow enough of your order book to actually be able to make money off of it, to actually get turn this into a business? And I think that's where a CDEX connectivity platform, I think, can really help. Like if you can connect different DEXs to get enough liquidity so that even institutional players, for example, are interested in this, because they are not interested in the small retail volumes that get pushed around. So then I think you have real play, and I think that's kind of our CDE, Cake DeFi Cake DeFi enterprise play also, so to provide a gateway into these protocols, and by connecting multiple protocols to kind of increase the liquidity in that system, so that this becomes interesting. So Nash, just to finish the story, unfortunately did not make it. Otherwise, I wouldn't be sitting here if they had been the FTX. But they had the right idea, I felt, and they just struggled to get traction for the exchange as a whole. They focused on security, focused on regulation, but I think the two parts that were missing were probably the customer experience on the platform and the liquidity. And I think those two are probably the most crucial ones. Make things seamless, but still easily to execute with the right transparency. I think if you get that right, then you can have a lot of really good things. So then Nash, continued on for a couple of years, and it was kind of sad to see that actually in the bull run of the end of 2020 and 2021 that they weren't able to pick up on the volumes, and then they kind of pivoted I think their business model more into wallets and then a bit more of a crypto savings account type of platform. But yeah, it's unfortunate because I think the concept was really good. So I'm a big fan of this CDEX concept.
Yeah, 100%. You mentioned lending, Fabio. Let me just go through a couple of things. We made this announcement today that we pulled all the funds back from lending. We moved them all to the backing address, so you can see them completely, all the funds backed. We are going forward. We're gonna actually use our marketing budget to pay these returns. That's why the returns are going to get adjusted. We're going to pay 4% on Bitcoin, 4% on ETH, 10% on stable coins, but only up to certain amounts. Beyond that, we're going to reduce the rates drastically. So this is very clearly targeted for marketing because it's going to come out of our own revenue. We're not giving those funds away. We're using this really as a marketing tool to attract customers, to attract funds. And we keep looking for opportunities, especially when times calm down a little bit more. And then we're going to go back to the regular lending. Now, I want to be very clear. I know we're doing this proactively. Customers could always call the funds back. We did this proactively just because at no point was actually our partner Sparrow in any kind of troubles. But to me, that's exactly the same thing that I had suggested last week as well. There's absolutely zero incentive to take any risk there. And so we actually live and breathe what we preach. Actually, we don't talk water and then drink wine. We actually talk water and drink water. So same thing here. For us, customer safety is always number one. We called everything back. On Friday or by Friday, you should be able to either withdraw the funds or leave them in the batches. Batches will be changed to 7 days. So it's not 28 days anymore. It's 7 days. The reason we're not going to do it on a daily, even though it's all on the backing address, is because operational, it's just really, really like a lot of work. So we don't want to do that. So it's going to be Friday. You know that these funds are with us. They're going to stay in the backing address. So you're going to see that they're not going to be lent out. They're not going to be leveraged. They're not going to be used. They're just sitting there. And as mentioned, it's a pure marketing tool for us to attract customers and to attract funds. Obviously, we may stop this marketing promotion at any time, especially if somehow people abuse this. I don't see how, but maybe we're missing something. And then we can stop it. Or, also if we feel markets have calmed down, or maybe we find a DeFi protocol that makes a lot of sense for that, where the risks are acceptable for our customers, and then we can shift it that route. So I really hope, and the feedback so far has been outstanding. I really hope you understand that. Just supply and demand right now for the risk reward ratio, in our opinion, is not acceptable. And if this means that we lose some of you as customers, or we lose you as you withdraw your funds, I'd rather have that than anything else. And I would hope that I get you back as customers in the near future, or hopefully you stay with us and actually appreciate that conservative approach that we're taking there. So yeah, key things. Couple of other things. Maybe like such media requests right here, Straits Times, Cointelegraph, Bitcoin.com, in Germany, BTC Echo. This happens right now, not even on a daily basis. I think it's almost happening on an hourly basis. So it's a lot of juggling, right? Because you have customers asking you questions on social media. If you don't reply, they feel like you're trying to hide something, which is absolutely not true. You obviously have a team to run. You have all these like journalists that obviously you want to talk to. So trust me. I mean, I've seen Elon's talk, I think yesterday at G20 or whatever, where he talked about he's doing 100-hour weeks. I'm definitely not at 100-hour weeks, but it's crazy for the entire team right now. Not only for me, really for everyone. It's just strong load. Everyone really hustling. Everyone really making sure that you're taken care of. So I hope you also sometimes appreciate that a little bit. Congrats to our cake busters who won 5 people. Logan 3K8, DJ Fun 78, Skill Gaming _DE, Habis Segin, and Angelica Burse number 6. Team is in touch. Maybe is already in touch or is going to be in touch. You're gonna get our very special Cake Buster swag box. Hopefully we get some unboxing videos. That would be really fun, very nice. Maybe some pictures. And well, congratulations and thanks for playing. We do have our 11/11 promo going on right now. Special freezer promotion. Check it out. Really, really cool. Very many people actually using it. And also, I want to actually mention one thing. Most platforms actually have seen record withdrawals. I only know Binance and us who are actually seeing a net inflow. So I do appreciate that trust you bring to us. Believe me, we are taking very good care. So yeah, it's very, very cool of you. And I mean, I really want to say thank you for that trust. And we're not taking that lightly. And yeah, that promotion goes until the 17th. So you have only 2 more days. One exciting thing, World Cup promotion. We're going to have something really, really fun prepared for you. There's going to be an announcement. Yes, Glenn is missing out on it because he's actually at the World Cup taking holiday. I don't know who approved that, but yeah, it's you're going to have great time there. Looking forward.
Slipped through the cracks, looks like. But yeah, now that it's in the system, I mean,
got me in a weak moment. He was like, "Hey, Julian, there's this one click. You don't have to look deeper. Just click yes, and all done." I clicked yes, and tuck, off he was.
You know, I have a responsibility, right? Like, I'm Belgian. The Belgian Red Devils are at the tail end of the golden generation. I understand that this is a controversial World Cup, but this is our last chance, I think, in my mind at least, to do something meaningful. So if I will never forgive myself if I don't go and if they actually do it or if they do something right. So I just need to go see it. I just need to see it.
Yeah, it's so crazy. The team tried to explain the promotion we're doing for the World Cup, and I was like, you're talking to someone who has no clue about football, who doesn't follow football, and you're surprised I don't understand that promotion. Like at some point I was like, does everyone else understand it? And everyone was like, yeah, it's so easy. I'm like, okay, I trust you all. Like, let's go with it. I didn't fully understand it, but it sounded amazing. Quite some hefty stuff to win, and it's quite cool. Yeah, so nice. Fabio, did I miss anything when it comes to Cake from the community side? Anything that you feel I should add? We covered everything there. Otherwise, yeah. But I wanted to kind of, you're always the one who's close there.
Yeah. There's not something very specific that needs to be touched on. I want to close maybe with a thing from not me, Fabio, an employee from Cake DeFi, but more of a customer perspective. Now there might be some things tied in from me as an employee as well, but in times like we are seeing right now, it's very wise to be conservative. Both as an investor and as a company. And so I really think we made great decisions during the bull market. I think we make great decisions for now during the bear market. And also when I think for myself as an investor and I look for the times ahead, and you made a great comparison, I think, last week, Julian, because when just a year ago, when all these ETFs launched, when we had a price above 60,000, everything seemed it's never going to stop. It's just up only. We are going to 100K. Everything is great. This space, we're going to take over the world. And when you feel the sentiment right now, it feels completely the other way around. It is so, if you read through Twitter, there is, oh my God, Mount Gox is starting to unload in January. Sailor is going to be liquidated at 13K. Their crypto.com is going to blow up. The contagion from Alameda is going. Everybody will become insolvent. Every altcoin project is going to blow up. Bitcoin is headed to 3,000. All of these things, it's not stopping. So really, if I scroll through my Twitter, it's devastating. People are really, really bearish, and usually it is going to stop one day. I think Richard Hart yesterday in the Twitter space, he said something really funny, and I'm going to paraphrase here. And he said, don't worry too much. In 1 or 2 years, the next bull cycle will hit, and we're all going to get rich again. The 5 most dangerous words as an investor you can utter is, this time is going to be different. Still, like right now, it's still looking that we are moving in these 4-year cycles. Every time until now, crypto or Bitcoin corrected about 85%. Why should this time be different? Why should we not come back from now? There is so many institutions looking into this. Cake had an event at Singapore FinTech Festival, and the interests from institutions, from retail, it's still there. Of course, there is not, we don't make all-time highs in Google Trends and so on, but sophisticated investors, institutions, sovereign wealth funds, regulation is coming. This space is not dead. We are experiencing a winter period right now, but better times will come. And I'm actually quite bullish. Of course, there might be a capitulation candle. We might go a little bit lower, but if you approach this with a longer time horizon, I'm very bullish, and I think now is the time to build. This is definitely what we're doing right now. So sometimes
Fabio always gives those pep talks on Mondays. I think at some point we need to record one and just post it publicly. And it's like everyone starts like with stand up, everyone updates, and then like the end is like, okay, so now it's like hopium from Fabio, and then like he pumps everyone up, and I at the end it's always like Glenn always comes in at the end and is like, hey, but remember guys, don't trade your salary on crypto, stay responsible. And I already see everyone clicking on the buy button, like let's buy it, because Fabio always pumped everyone up.
Every time Fabio goes, I want to jump back in. Even now I feel like, okay, let's wrap this up. I need to go buy some Solana because it's going to pump back. Are we buying Solana, by the way, on a personal level? Are we buying or letting it go?
I don't know.
I'm not sure.
Maybe a little bit. Okay, thanks.
Cool. Yeah. I'm happy that we could finish off on a good note.
Yeah, a friend of mine asked me, why is the market up today? And I said, no large exchange collapsed over the last 24 hours. Our standards, have really come down. Like if something doesn't collapse in the last 24 hours, everything starts pumping. So expectations are low. So yeah. But the key thing, and I want to actually double down on what Fabio says, right? I mean, it does look dire on a lot of ends and a lot of things. And again, I want to be very clear, right? The fallout of Alameda and FTX, we haven't even seen the tip of it. That doesn't mean that there's going to be a lot of fallout, but potentially there can be, and it can be dramatic. But there's always the same thing, that if that does not come, it can go extremely quickly. And let me race, and I'm just going to race through those slides in literally a minute, because we have covered this so often now. Fed, as expected, we are getting close to the peak of the interest rates. We're going to go lower. US elections, yes, the Republicans did not win the Senate, and it was really kind of a flip. However, the House is pretty much won. That means we're going to have this opposition. That means we're going to have everything that's going to go through this year is going to go through, because expect for the next 2 years, it's going to be a lot of opposition. Then, as expected, CPI numbers went to 7.7%. We saw one of the strongest weeks last week in like stock market history. And crypto is loading up for that, right? So everything as expected. The only thing we didn't expect at the beginning of this month, and I just want to say, Fabio, we're so spot on right. We talked about this is going to be the most volatile November ever. Come on, guys. Like, where's the cheering? Like, we're so right here, as predicted. Yeah. So, but on a serious note, I mean, there are a lot of fundamental positive drivers, and it can turn around on a dime, and then this thing can really pull your skin off. So Cool. I love that trio thing. It's a nice dynamic. Yeah.
It's good stuff. It was not so planned this time, but we should plan it for next time. Yeah, it's quite nice.
Definitely. Fantastic.
100%.
With this, everyone, thanks so much for the support. Take control of your financial destiny. Head over to cakedefi.com if you want to become a customer. If you are a customer, check out all the promotions. Obviously, team members, we are hiring. Check it out. Thank you. See you around. In the meantime, stay safe, stay healthy, all the best. And until next week, bye-bye. Thanks, Fabio. Thanks, Glenn.
Ciao, ciao.
Cheers.
Thanks, everyone. Bye.